head of Venezuela's state-owned oil company there in St. Petersburg, Russia today. And just quickly, corn futures falling. According to government forecasters, the U.S. Corn Belt could see a flash drought over the summer as temperatures across the region may be higher than normal. Moving to metals, gold pairing earlier gains, trading right now around, let's see here.
I'll let you know.
You can go, sorry.
It was
12.90.
90. Yeah,
was up over angst or the possibility the UK might vote to leave the European Union, but after a UK lawmaker was killed earlier, odds of a Brexit are increasing. In a Bloomberg survey, traders said gold could reach $13.50 an ounce within a week of the vote, and should a majority choose to remain in the bloc, bullion might slide as low as $12.50.
All right, and if you look into the terminal, here's a chart showing gold holdings and exchange-traded funds are at the highest since October 2013, and silver-backed funds are at a record. For more perspective on where prices could go from here, we're joined by Tim Evans, Chief Market Strategist at Longleaf Trading Group in Chicago. Tim, thanks for joining us. What was it about the round trip in gold today? We started the morning off at 13.13 and change, and suddenly we're back below that very important $1,300 an ounce level.
Yeah, I mean, it's definitely been a pretty wild ride here during today's market session. I mean, I think it reflects the current levels of volatility that have been building in the market, for the last 6 weeks or so. We see that reflected in the GVC gold volatility ETF, which is up another roughly 10% today, at least as of about 15 minutes ago.
Yeah, I wanted to ask you about this Brexit risk. How real is it? How much are you taking into consideration here? What kind of difference do you think it's going to make here with the price of gold?
I mean, it's a significant risk. UK prediction markets, which in my view are a lot more accurate than polls suggest, there's a greater than a 50% probability that Britain will in fact leave the EU. If that's the case, I mean, that leaves a variety of concerns in terms of the overall stability of the EU as a whole. That instability, or that concern of instability, is ultimately what is creating this safety bid in gold. So, if that is the final decision and that's the way it happens, I think you can expect an exponential move higher in the gold market.
Where is this money coming from, though, Tim? Because we're seeing a safety bid everywhere, really. Treasuries, sovereigns around the world, corporate debt. I mean, you name it, the yen, currencies, you name it, there's a safety bid there. So is it really a safety bid going into gold, or is it just money getting parked until something else happens?
Well, if you look across the overall landscape, if you look at kind of the market as an overall blueprint, I mean, you see fear virtually everywhere. I mean, if you look at the VIX on the S&P 500, you've seen, yields on the long end of the yield curve fall. You've seen the volatility in the gold market increase. You've seen price direction in the gold market increase. So in those markets, I mean, you see the fear of the marketplace overall. I mean, what's been interesting is that, the stock market as a whole, in terms of market direction, has not followed that. So a lot of this is more anticipation, in expecting possibly, a fallout in the market overall. Our view is the reactionary move is really where the strength comes from. It really makes that move potentially a lot more dynamic. So if we see an exit from the UK, or the UK exit from the EU, we see the overall U.S. stock market begin to fall apart. I mean, this could get ugly fast.
Yeah, Timothy, I was just thinking here about the sort of panoply of risk that we face here. Certainly Brexit is one part of that, but you look at what's going on all around the world. What other risks are you seeing as real big driving forces here behind the price of gold?
Well, I mean, I think what the market's trying to figure out, I mean, we've seen a consistent decline in economic production and activity globally. There's a lot of concern, obviously, continuing out of Asia. European performance has been extremely poor. I mean, we have negative bond yields in Germany. We've seen 4 months now of declining employment numbers in the U.S. Virtually any metric you look at, the news is negative. So it's creating a lot of anxiety that's building across all major markets.
Just a question here about, you've mentioned volatility. Just a basic question here about that sort of explains where gold might be headed. Just a layman's question there. But when you look at volatility, how does that indicate where gold might be headed?
Well, I mean, I think the GVC index is a good gauge. You saw long-term support at that $15 level, and I spoke about this when I came on your show back in April. Expecting upon reaching that $15 level, we've seen pretty dramatic movements in the past in gold. You know, we touched down exactly almost 15 bucks at 15.09 in the last trading day of May. And, you know, we've proceeded to rally over 50% since that point. You know, we look at $20 as kind of that key support level, suggesting the safety play is in. So as long as we continue to hold that $20 level in the GBC ETF, you know, the upside in gold in terms of market direction, we definitely feel is there. And, you know, that 1450 level is, you know, a target that's definitely reachable.
So we also saw a bit of a drop back in oil today. 46.28 is the print now on WTI crude. Was that specifically due to, you know, the fact that we don't have as much of a glut as we thought we did?
I'm sorry, could you repeat that question, please?
Why did oil retrace some of its gains?
Well, I mean, the overall kind of market environment has been poor. You know, we're seeing that in energy markets, grain markets, metals markets. So the kind of that risk appetite of the market overall is a bit on the defensive. So I think the energy complex is, you know, more or less participating kind of in the broader overall market sentiment today.
Are we seeing similar moves to gold and sterling as well and other metals?
Did you say, do I follow those markets?
Yeah, I was just curious if we're seeing similar moves in them as we're seeing in gold right now.
Yeah, yes, absolutely. I mean, silver is, you know, kind of has a lag effect. I mean, gold really led this rally beginning at the, you know, virtually the year of 2016. You know, silver had an aggressive catch-up rally in April and May. Gold is now leading the market higher, or at least leading the metals markets higher. And silver, you know, we feel is poised to, you know, play catch-up again. Silver's yet to take out its May high, so we feel that when it does that, you know, it's positioned to have a very aggressive move higher from there.
All right, Tim Evans, Chief Market Strategist at Longleaf Trading Group in Chicago. Thanks.
Coming up in the next 20 minutes of Bloomberg Markets, Ukraine's Deputy Prime Minister joins